Good day to everyone joining us from around the world, whether you're just waking up midway through your trading session or winding down for the night. Welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. So my name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. Okay, so today's live stream, it is not just a presentation, but it's a conversation. So it's dwindled into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who are here to shape out what WeMasterTrade represent today and sculpt traders, mentors and role models within our community. So first, let me introduce the ever-composed, always insightful Helen. Welcome, Helen.
Thank you so much.
Juggling bills, tracking expenses.
Thank you so much, Aidan. Hello, everyone, and thank you for spending your time with us. I'm truly looking for today's session. There's so much to cover, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offer. From how you start, how you grow, to how you earn. This is kind of platform that doesn't just run trades, it's build traders.
Absolutely, and next is the one to bring sharp analysis and clarity to our chat and conversation. He's strategic, he's sharp, and he's a real force in the trading space. Please welcome Ralph.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system. From packages to promotions to scaling and long-term profit sharing. If you ever had questions or even doubt, today is the day to ask them.
Ooh, and that's exactly what we're here for. Whether you're brand new to WeMasterTrade or you are already a part of the funded trading program, today's live stream is going to give you the full picture, not just the highlight reel, but over the course of the session we are going to work you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we are doing things quite different in the traditional brokers or platforms. So, I want to be clear in this session, okay? This isn't just about sales, this is about understanding, as we want to know what you are signing up for and what kind of structure supports your journey and how you can use that structure to not just succeed, but to scale.
And speaking of structures, we begin by sharing the story behind WeMasterTrade. How we were formed as a funded project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading packages, with real discussion in detail. We will explain the logic behind each one, what kind of trader they design for, and how the structure changes depending on whether you choose the challenger model or instant funding model. So if you ever look at our packages and talk, which one is right for me? Today we will answer that.
And more than that, we'll also give like comparison between packages. We'll break down pricing, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a truly informed decision. So it's one thing to see numbers on the website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always how do I stay confident while trading? So we move naturally into discussing trading rules, which honestly is one of the most important parts of today's sections. We will explain what the die loss limit is, how it's calculated, why it includes both close and floating P&L, and how to avoid violating it, especially overnight. We go into the maximum total loss, the consistency ratio, and we even address common misunderstanding about trade sizing and risk trade policies.
And we won't just explain rule in isolation, we will explain them in the context of live trading decision. I will share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
So, and while we're here on the topic of having you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof, or have some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade's offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income as WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from broad firm. When you trade on a funded scale and generate profits without breaking rule, we show that profit with you up to the 90%, but there are more to than just the percentage. We will explain the full payout circle and threshold and timeline today.
And now I know many of you watching today aren't just traders, you're also educators, influencers, or people with large networks. So that's why we are also taking time to explain our affiliate program. And we'll do it transparently. We'll walk you through how commissions are calculated and how affiliate referrals are tracked. And more importantly, what you need to do to qualify for payout, including a detailed explanation of the two referral rules and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income stream.
So as you can tell, this is not a service level live stream. We're delving into everything: packages, referrals, promos, scout up pack, profit sharing, and affiliate opportunities. So with all purpose on one purpose in mind, helping you make the most informed, empowered, and confident decision possible.
And we want it to interactive, not just informative. So if you have a question at any point, please drop it into the chat. Our moderators are watching and will answer many questions like as you can. Your story matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this welcome, I'd like to say that WeMasterTrade is not just a platform, but it's a commitment to build real traders, to create fair structures and scalable pathway for people around the world who are serious about trading as a profession, not a game. So, if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. And let's begin once again, welcome to WeMasterTrade LiveStream. Okay, so thank you all once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who we are and what we believe in. So that's why we built this platform the way we have. So because you are putting in your trust and you're trading into a company and understand its philosophy isn't just helpful, it's essential. And so this segment is about origin, intention, and impact. It's about how WeMasterTrade began and what values underpin the funds and how those values translate into real tools and outcomes for traders like you. And to talk about that, I'm joined as always and by two people who will lead and bring these principles, Howland and Ralph. So let's start at the beginning.
Thanks, Aiden. To truly understand WeMasterTrade, you need to understand why it's worth creating. Unlike many broker firms or broker that involve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give a capable trader access to capital, regardless of their background, location, and financial situation. We were found in the 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its name on signal sharing, investor network, and copy trading, WeMasterTrade was designed to serve more focused vision to identify, support, and scale high potential traders, giving them the pathway to earn professionally without risking their own savings.
And it's important to note that WeMasterTrade is not a broker, that's not just a label, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on a capital risk, we give you the roadmap, you bring the skill. But we also know that the skill alone isn't enough, which is why one of our founding principles is educational first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special. It courses ranging from the short trade training philosophy all the way to advanced risk calibrations and multi-asset strategy design. So the WeMasterTrade Academy isn't just about theory, it's about implementation. So we designed the curriculum to match the real-world trading environment within WeMasterTrade so that you can learn, you can apply directly into your funding account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 21001-2018 certification, which confirms that our education products and traders development programs meet rigorous international criteria for quality, structures, and learning engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just a collective fee. In an industry where money so scale firms come and go, WeMasterTrade has a position itself with real operational stability, a compliant framework, and internal accountability. We're not here for a reason. We're here to help build career.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about bouncing challenges of the years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time traders, we have women re-enter the finance world after career breaks, and we have young professionals from underbanked regions finally access the market with a fund account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insight, trading psychology, breakdowns, market reactions, and platform updates. So we believe that learning never ends, and we keep our traders informed. But let's also talk about culture. So what makes WeMasterTrade different isn't just about the product that it is offering, it's the community itself. So we actively promote traders' integrity, respect for competitions and knowledge sharing. So whether you're in a Telegram group, watching a YouTube series or engaging with us on live chat support, you'll see what we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. As WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and is something we're proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funded accounts, and connect with people who've gone through the system. The stories are real, the capital is real, the results speak for themselves.
Long story short, WeMasterTrade is a capital allocators, a talent accelerators, and an education-focused trading institution. So we are here to challenge the status of quote the trading access, to build a system that will reward performance over promotions, and to create deal scalable income opportunities for traders around the world, regardless of their trading point. So this is more than just a platform, it's a trading moment. And if you're ready to be a part of it, today's LiveStream will show you everything you need to know. So thank you Harlan and Ra for the deep and honest work through coming next. So we are going to take these foundations and connect it directly to your actual offering. So that means we'll be discussing all the different account packages available at WeMasterTrade, how it differs and what Booth is designed for and what kind of results you can expect from them. So just stay with us, it's about to get even more exciting. Welcome once again to the official WeMasterTrade live stream. Okay, so now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move in to one of the most essential parts of this live stream, an in-depth discussion on our account packages. That this is where it all begins for most traders choosing the structure that's best aligned with their goal, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we are talking about frameworks. So each package of WeMasterTrade represents a different pathway, toward growth. And today we'll walk you through all of them, what they offers and how they're structured, and most importantly, who they are designed for.
Exactly, Aiden. As WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct level life for trader, the challenge package and the instant funding package. It can include a variety of account size and configuration because we know that traders come with different strength, risk appetite, and time life.
Let's begin with the challenge model, a true phase evaluation system built for traders who want to prove their skill before being allocated capital. Each structure is fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, we begin with a simulate account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameter. There are three stages in total, phase 1, phase 2, and then the funding stage.
So take instance for our 10,000 challenge. It's a great starting point for those who want to minimize upfront costs while building a track record. So let's break it down phase by phase.
Okay, in the phase 1, you will need to achieve an 8% profit target, which is $800 without reaching a 5% daily level. It's with 500 or 10% overall loss limits. I will have unlimited time to achieve this. That's a key difference from many brokers. We don't pressure you with the deadline.
And once you pass phase 1, you will move to phase 2, where your profit target drops to 6%, that's around $600, The risk rules remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funding account where you trade with the real capital, have a no profit target, and your profit share jump up to the 90%. That's one of the highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you're still refining your strategies or want to get a feel for WeMasterTrade's risk framework before scaling, this is a perfect package to begin with.
So now for those who are confident with their strategies and want to start with a largest account size, we offer a 25,000, 50,000 and 100,000 challenge package. So the structures are similar to phrases, the same 5% daily in total drawdown limit, but the profit targets go proportionally.
For example, in the $50,000 challenge, you will need to hit the 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same 100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you already passed all the prop challenges or have a strong verified trading history, this is a good step up.
So every challenge package comes with a one-time fee. For example, just $45 for the 10K package. So this fee is refundable once you become funded and meet minimum performance conditions. But if things don't go your way, so you're eligible for a 50% discount to start fresh. And what if you don't want to go through a challenge at all? It's instead want to access real capital immediately and get paid based purely on results? Well, that's where our instant funding package come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just purely live trading backed by a structured, fair, and transparent system. And
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through eight of the line of 5 main instant funding packages: a standard, 51010, 510 euro, 510 novice, and customized. We will compare the detail, but more importantly, we will help you figure out which package is right for you.
So let me set the scene quickly. So all of our instant funding packages give you live trading access from day one. But that means no longer challenge phases, no evaluation. You pay once, follow the rules, and you're trading live capital. And every account, no mail site, includes no time limit, up to 90% profit shares, balance-based drawdown, scale-up plans toward 1 million support EAs, swing trade scalping, and even HFC. So now let's go into package by package, and as we go how and rough, I want you to determine with real advice who to actually choose which one and what kind of traders you've seen succeed with each.
Okay, let's start with the standard package. I will describe this one as the best friend for trader who want stability. You're getting up to the $200,000 in capital with a very management 4% daily loss and a 6% overall.
it's like that camp steady account that doesn't push you to overtrade, and with a profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And what about commissions?
The competitive approach developed the product at the $4 per loss, grow at the $4 per loss, and indices as a $1, and stock at just the euro point euro 75 per lot.
And everything is allowed: news trading, scamming, wicking holding, EAs, HFT, you name it.
So, for the audience here, someone who trades regularly, understand your strategies and wants a full range of assets, and plan to play the long game, this is your sweet spot.
And it's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you ever had an account blown due to unrealistic rules, you'll find the standard model refreshingly fair.
I could also say as a swing trader, the 4-6% risk profile given just enough flexibility to hold multi-day position, especially with weekend holding fully allowed.
Alright, so moving over here, and let's talk about the 5-10-10 package. Same capital ceiling up to 200,000, but you get 5% daily loss and a wider 10% overall limit. So why does this matter?
That execution is massive for traders who scale into positions or take multiple entries as per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still got full support for scalping. EA news trading is very trader friendly.
This is best for day traders, especially those trading assets like NASDAQ or gold that move fast. If you got a tested in the intraday strategies and just need some risk spreading room, this is your package.
And also for trader who want structure but don't mind having a that's profit target. The clear milestone motivates some people, especially if they're out oriented.
Oh, now here's a professional favorite, the 5-10-0. You get 5% daily loss, 10% overall maximum loss, but the profit target, non-zero.
And that's a lesson for higher precision trader. You're no longer chasing a number, you just focus on protecting equity and growth in capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
When you are a swing trader, we consider trader people who prioritize consistency over speed. If that you will try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
So now for the rule breakers for want to be evaluated on how even the profits are, the 5-10-10 no PT remove the profit consistency track.
Exactly, same 5/10 risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copier are not allowed in this one, so it's for the manual trader only, and you need to trade responsibly. For a website trader who sometimes has big spike, this is a great.
Perfect for high risk reward traders or anyone who has issues with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
Last but not least, a customized package. So this is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust data loss, overall loss, profit target, and consistency rule to your liking. Plus, you can fund up to the 400,000 more than any other account.
It's premium, flexible, and comes with on trading style allowed, including EAs, news trading, weekend holding, HFT, and more. Top-tier professional as hedge fund traders, signal providers, high-volume traders, anyone with a very specific structures in mind, this package lets you build in.
I always say, if you try out the model and nothing passes, build your own blueprint with customize. That's freedom is rare.
So to sum up every instant funding package we offer, comes with clear reach perimeters, recognition, deep market access, and really profit potential. So there are load limits and payout start as early as 1 day in.
And no matter your strategy, scalping, swing, auto, and manual, there's an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're never ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risks and risk consistency rules that power our entire platform. So stay tuned, this is WeMasterTrade, where real capital meets real strategy. Alright traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. So because let's be honest, getting funded is exciting, but staying funded, oh that's exactly where the game really begins. And the one reason to lose their account, it comes to one thing, the daily loss limit.
Yes, the dreaded die loss is the one true trader thing they understand until it kicks them out of their account at 3:17 p.m. 3:17 p.m. on a random Tuesday.
But here the good news. When you understand how it really works, it's become one of your battle for risk control. So today let's break it down from top to bottom.
So what is a daily loss limit, also called the maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and flow trades on any single trade day. If your equity falls below that limit, even for a moment, your account automatically closes.
And the key thing here is the die loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
So let's work through a live example. So imagine at the start of day farm, your account balance is 105,000, your equity, however, is higher, 107,000 because of open closing profit.
If your own 4% daily loss limit, we calculated as of the highest number, the 107,000.
So 4% of $107,000 is $4,280. That means your equity for the rest of that day can't drop below $102,720, or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close. It's real time, even if your trade is closing last and you haven't closed it yet. If your equity dipped below that threshold for even a second, oh, that's it.
Now let's reverse it. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we rate 4% on the balance, so there are 4,000.
So now your equity must stay above 60,000 throughout the day. If it drops to, let's say, 95.999, auto liquidation kicks in, no warning, no margin call.
Well, the system will send a market order to close on trades. Everything liquidates. Your account is disabled and you can't trade again unless you purchase a new package.
And here the kicker, the outflow happens when the system detects the threshold was crossed, but due to market fluctuation, your final P&L might look worse than the actual threshold. That's because the system executes a closure based on price delay at the time of liquidation.
So even if you're in the intensity of a 3,900 lots on one sleep pay, spike can go on Nasdaq, and certainly it's 4,200. That's why we say, don't lie the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First up, know your buffer. Never plan trade to take you right up to the edge of your limit. Let's aim at the 10 to 50% room below the mark router, especially in a volatile market.
Tip 2, check your equity, not just your balance. I can't stress it enough. Most traders stare at their balance on day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3, use a dashboard or trackers. Inside WeMasterTrade, we provide fixed dashboards that shows live or downstairs. Use them, check them, don't rely on your memory.
And also, poor trading after a big loss early in the day. If you are lost at 3% in the first hour of learning session, maybe it's time to stop and reflect. Not try to rerun trade your way back up.
Another big one, trade smaller during news hours. If you're trading gold during an epic with full lot size, you are practically begging to break the die loss rule, cut position size, and ride post volatility.
So, what are the top rookie mistakes you see when it comes to daily loss?
The number one, the over leveraging. Trade the open position that's at 5-7% of their account, thinking they will grow quickly, but if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 bip gap, the die loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter, they're not. Remember, the equities includes both floatings and closed positions. So the total equity line is your score.
I always say this to new trader, the daily loss rule isn't your enemy, it's your account error. It's designed to protect you from doing something irreversible.
Exactly, it's false discipline. You can be aggressive, but only within the box, and if you learn to trade inside the box, you'll last longer than 90% of the market.
And one last note, this isn't just about rule, it's about trust. So WeMasterTrade funds you because we trust that you'll manage your risk responsibly. The daily loss is there to protect that trust on both sides. So next up we are going to enter a short break, and after that we're going to continue to explore the trading rules here at WeMasterTrade.
We copy trade. copy trade. We copy trade. We copy trade.
So welcome back to this in the previous segment where we have covered the daily loss through, and if you haven't already clicked that one, you're missing out. But now we are moving on to the day from the daily loss boundary to the absolute boundary. So I'm talking about maximum loss rule, so also known as your account start line, the line that can be crossed not just for the day but for the entire lifetime of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily loss, so I'm fine. But then a week later, they chip it away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Just defined it simply, it's the total maximum amount you're allowed to lose across all trades for the entire account if your equity, that is your real capital including open trades, ever drop below a certain percentage of your stock balance, gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total browser crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
So let's walk through a concrete example. Suppose you have an instant money account with an initial balance of 50,000 and your max loss in it, which is 6%, which is 3,000.
That means your equity can never go below the 47,000 ever. Doesn't matter if you make the 1,000 yesterday, the total the road down from your highest point back down to the debt threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit. Account closed.
So, and just to the net gain or loss of quarter trades, it's about relative to that stop loss for.
Here where it gets interesting and a little tricky. Let's say your account grew to the 51,000, correct, you're in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you had to form before you hit it.
Exactly, you have 4,000 in total buffer because 50,000 minus 47,000 equals 4,000. So your profits give you cushion, but the floor never moves.
Once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. On trades are closed immediately at market price.
And again, like with the daily loss, if the volatility was slippery, your account might blow out below that line. That's just execution reality.
So, and most importantly, once it breached, the account is permanently disabled. You need to purchase a new account if you want to continue trading. No resets, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
To first, track your total low losses every day. You should always know how close you are to max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protection, not permissions. Don't treat floating profit as green light to increase risk. Instead, consider locking gains by reducing loss size when you are ahead.
Third, manage your floating drawdown effectively. Even if you're participating overall a single trade with simple stop placement can take you from safety to shutdown in a few minutes.
Number 4, stay cool when you're low. If you're down 5% out of your 6% limit, that's not the time to go down. The time to step away, pause, and retain your entry.
The biggest mistake, underestimating floating drawdown. Traders blow 3 losses and think, okay, I've still got room, but they forget about the 4 trades floating minus $1,800.
A second, traders who trade recover after a bad day. They lose 4% in the one day, come back swinging the next day, thinking they will make it back, and instead taking another 2%, and boom, violation.
Ooh, and this one hurts, ignoring split page during major news. So even with a tight stop, these candles can gap you straight through your limit.
The max loss rule is there for a reason. It's not that a punish you, it's that reward you from yourself. Every successful trader I know see that stop loss, whether personal or institutional, as a non-negotiable boundaries.
Right, it's the reality check. If you're constantly pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we are teaching structure. And the math loss rule is what separates gamblers from professionals. So remember, your net loss is the percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance, and it includes both close and floating losses. And one breach, your account is forever gone. So, coming up next, we'll explore the consistency rules and why steady profit matters more than big spikes when it comes to growing, scaling, and getting paid.
If you ever made 5,000 in one day, then made $200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
So stay with us. This is the WeMasterTrade LiveStream where structure meets capital. So let's define it clearly. The profit consistency ratio, it's a measure of how even your profits are from day to day. So the more balanced your profit, the lower your ratio. And the less consistent, meaning you have more one giant profit day, and then smaller or losing days, the higher your ratio.
Oh yeah.
So the idea is simple. With if 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's where we can scale.
The formula is really straightforward. Take your best trading day result and divide it by your overall profit since you started the account, then multiply by 100.
So the best day profit divided by total profit multiplied will equal the profit consistency percentage.
And just to be clear, the bad day refers to your highest global profit in a single calendar day, and the total profit is the sum of all your global profits minus any closed losses or open losses across the life of the account.
So let's say you had the following result over 5 trading days. In day 1 you get $100, day 2 $200, and day 3 you lose $50. In day 4 you gain $100, and day 5 you gain $60.
That means your total net profit across 5 days is $100 plus $200 minus $50 minus 100 minus 60 equal $410.
And your best day was day 2, that's $200 in profit.
So now we apply the formula to 100 divided 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48%, 48.78%.
Now, let's say your account requires a 20% profit consistency, which is common. This trader is way above that, so they couldn't qualify for the payout yet.
So even though this trader is profitable, they're not consistent enough. They have one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to trader. If you rely on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. We must evaluate your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, who get trusted with more capital.
Alright, so let's address the numbers. So what's an acceptable profit consistency ratio?
Typically, the rule is at 20%. That means your best day should not exceed 20% of your overall profit.
So if you make the $5,000 total, your biggest single profit day should not be more than the $1,000. If it's it, you will need to keep trading slowly to bring that ratio down.
So let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and even out the curve.
And here how to do that. The first one, try smaller size for a few days. The next one, take smaller control win until the $200, $300 days. The next is avoid big swing trade that could spoil your ratio again. And finally, spread profit across multiple days, not one monster setup.
And for those using EA's monitor your equity curve, if your EA is growing profit heavily into one day, you might need to rebalance it. The bottom might be profitable, but if one passes through unless it's confirmed, configure its payout logic in mind.
Mistake number one, trader hitting target early, then taking the rest of the week off. That inflate your best day and leave the rest of your curve flat.
The mistake number two, over trading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
And the mistake number three, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
And the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can't be consistent with the $25,000, what happens when you get $100,000 or more?
Exactly, consistency is what made you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen it time and time again. The traders who respect this rule, they're the ones who get multiple payouts, referrals, and grow into a six-figure funding account.
So don't fear the rules, understand it. Use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade does work, calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
And to recap, this rule is about balance, not volume. So aim to keep your back stay under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. So coming next, we'll dive into the scale plans and how consistency like this actually leads to more capital, more trust, and more profit to share.
So if you're ready to turn a $10,000 account into a 100,000 one without ever changing your risk profile, don't go anywhere.
This is where the reward kicks in.
So let's continue. You are watching here WeMasterTrade official live stream where performance mixed structures and discipline builds real opportunity. So we have worked through the daily loss limit, tackle the maximum loss limit, and examine how profit consistency shapes your long-term payout and growth. So now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy in the market, but truthfully, it's inconsistency, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down at its core. The risk consistency rule is quite simple. You're not allowed to risk more than 2% of your initial balance on any single trade idea.
And that includes all losses associated with that trade idea, both low losses and floating losses. Even free commissions and swap are counted.
And for some accounts like the 510 Novice package, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
So, because consistency isn't just about the outcome, it's about the process. So, the most erratic your position size is, the more valuable your equity becomes, and they will make you hard to scale.
This rule really grow you and the firm. It's help reverse capital, prevent less equity swing, and make sure your assets play out over time.
Think of it as your account heartbeat. If your position size goes up and down, 0.5 loss rotate, 5 loss the next, the system flag it. That's not structure, that's chaos.
So, because this is where it gets technical, so stay with it. The term trade idea, it isn't just about one order, it's a group of trades that share the same logic.
If you open trade by position on go at different times and you close them within the 3 minutes of order, that's one trade idea.
Because it's the same symbol, same directions, and close around the same time, even if you open them at different times, they are seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logical bundles and applies the 2% across the entire bundle, right?
You can have a multiple separate trade ideas as long as one respects the risk limits.
For example, if you go long on gold, short on GBP, GBY, and short on AUD, USD, and each position has its own distinct direction and asset. Those are 3 separate trade ideas, and each one can raise up to 2%.
So let's say you go on buy gold and then you go on buy again, and then you have 3 open positions, same directions on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or eventual loss from those positions is 2% of your starting balance, boom, you have broken the rule.
Another mistake is the opening multiple gold buy, then closing 1 10 minutes later and 2 orders together. The system will group trades flow within the 3 minutes of each order. Also be mindful of your flow timing.
So let's go hands-on. Suppose you have $100,000 account, the 2% max rates per trade ID means you can't lose more than $2,000 on any trade ID total.
So you open to go buy, 1 loss egg, you don't play a stop loss. New hits, market drop though, 100 pips is lost at 1,000 and that 2,000 total.
You write on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken. Account flagged or liquidated depending on the enforcement model.
On some accounts, especially in some money accounts with structural tolerance, this breach may result in loss of funded status or immediate closure.
Tip 1. Set your lot size based on account risk, not emotion. Know how many pips equal 2%.
Tip number 2, use stop-loss order religiously. Set them based on risk per trade idea, not random chart level.
Tip 3. Don't stack trades without calculating the combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
Tip 5, if you want to split an idea into multiple interests, do it smart, count in smaller, use micro lots if needed, keep the total exposure below 2%.
The most common reason traders break this rule, stacking multiple entries on one trade idea, thinking is still separate.
The second, open high-risk trade after a win, assuming they are playing with how many. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating bet is countered to 2% risk.
This isn't just policy, this is professional practice. Hedge fund follow this, bank follow this, a real trader follow this.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and the integrity of this community.
And traders who internalize these rules, who understand that small consistent risk is the foundations of scalable capitals, those are the ones who grow, and those are the traders who grew from 25,000 to 1 million.
If you want to be a professional trader, you have to think like one, and professional traders always know how much they risking on every trade every day.
And if you're still guessing your lot size or opening trades because the setup feels right, take this as your sign, step it up, get structured.
So this is more than just rules, it's habit. Beating it now and path to big capital and larger payouts becomes way more predictable. And that, my friends, wraps up the 4 essentials of trading out WeMasterTrade. Daily rules, maximum rules, profit consistency, risk consistency. So master these and you're now to stay compliant. You're building a foundation for serious capital management, long-term payouts and scaling.
Coming up next, we will dive into the scale plan and how traders who pass or did rules move from starter account to 6 and even 7-figure capital allocation.
From $10,000 to $1 million, it's not magic, it's consistency, discipline, and a system that rewards both.
Oh hi everyone, this is it. You may trade the risk through the cover conditions and the structures of your account. Now let's talk about why it's all worth it, because at the end of the day we know what other trader really wants.
More capital, more room to take, bigger loss, bigger reward, without ever putting your own money at risk.
And that's exactly what the WeMasterTrade scale plan is built to provide. This is your roadmap from being a small account trader to managing a 1 million funded account, and it's not fantasies, it's a clear path with defined milestones.
The Scale Plans is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violations, and demonstrate risk control, will increase your capital allocations, meaning in other words, you'll earn more freedom to trade without spending more out of the pocket.
And let's be clear, this isn't tied to subscription model or remake. You don't pay for scale up, you earn it through consistency, profit, and discipline.
And the scaling is aggressive. We are taking doubling, tripling, and eventually scaling up, scaling you all the way to 1 million in funded capital, depending on where you start.
So WeMasterTrade, we offer 2 types of scale plans depending on your account type. So first is a 3%-based scaling, mostly used for chance accounts, and second is amount-based scaling, used in instant money accounts like for 10k, 25k, 50k and beyond.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1 with a 100% of your base account. Hit the 20% profit target with the profit consistency, and you promote to level 2 where your capital increases by the 50%.
From there, the growth explodes. In level 3 is equal to 300% of your initial account balance. In level 4, it will be equal to 600%. Level 5, 1200%. Level 6, 2400%. And finally, the maximum allocation is 1 million.
And for each level you learn to indicate the perfect target, you need to complete at least 2 payout cycles so the system knows you're not just performing, you are stable.
Now, for instant funding account, the scale of work with the set dollar target and plan adjust depending on your initial funding size.
So let's take the 10,000 funded trader as an example. Here's how the level looks. In level 1, it is $10,000, and level 2 is 15,000, level 3, 30,000, level 4, 60,000, level 5, 120,000, level 6, 240,000, level 7, 480,000, level 8 is 960,000, and finally in level 9 is 1 million.
Each step has its own profit target, usually 10 to 20%, and some will require profit contingency rules, especially in the early stages. Once you're beyond the level 3 or level 4, the contingency requirement drops and it becomes all about tool performance and discipline.
If you start with the 25,000 account, your first profit target is 5,000. Hit that with consistency, you boom up to the 37 and 500, and then 75,000, then 150,000, all the way to the 1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
So to move on, the next level is that you need to do with a specified profit target, avoid overvaluations, especially MAC loss or daily loss, complete only 2 successful payouts, and maintain profit consistency if required for that state.
Once all conditions are met, we issue the personalized trading agreement and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. And let me be real for a second. The most common mistake, overtrading to force the target. Traders push too hard trying to scale fast and end up violating drawdown.
Another one, ignoring consistency in the early level. If you make the 80% of your profit in one day, that payout won't qualify. You need to spread your wins.
And of course, if you're not planning to upgrade, you should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling isn't just financial, it's a matter. Every level brings more capital but also more responsibility. If you start trading the 10,000, how you will handle the 300,000?
Exactly, that's why the scale up is step by step. We test your psychology, your discipline, your patience, long before we hand you 7-figure capital.
And that's what makes a real funding, not demo hype, not a gimmick, it's a structured capital ladder for real traders.
So, if you're wondering whether it's worth staying consistent, passing challenges, and trading patiently, this is your answer. From 10,000 to 1 million is possible, and it's been done repeatedly by WeMasterTrade trader.
It starts with one rule following, profit making, discipline month, then we grow it.
So take your time, learn the structure, respect the rules, because here at WeMasterTrade when we say we scale performance, we mean it. And with that, we wrap up the full walkthrough of the WeMasterTrade funding system, from account setup to risk management to scale up, whether it's to starting with 10K or 200K. The road to 1 million is real. Alright, traders, before we end this incredible sessions, we want to bring everything full cycle, because today wasn't just about telling you how WeMasterTrade works, it was about showing you what it means to trade with clarity, with capitals, and with confidence.
Okay, we walk through rules, platform, payout, and promotions, but now let's zoom back out and route outside and what the world is doing today. The market is important. The news keep coming, and as a funded trader, your ask come from stay prepared, not just data, but with context.
Exactly, and today, May the 8th, has been one of the busiest data days in weeks. What we've seen across Australia, the UK, and the US isn't just number, it's directional flow. These releases are already impacting trades, and they are shaping what tomorrow will look like too. First of all, Australia, the labor market sent a message.
So let's start from the Asia Pacific, because Australia delivered a monster print this morning, plus 89,000 jobs added, forecast just 2,900. Oh, that's a 4x surprise.
That's the kind of shock that causes algorithmic repricing, and for good reason. It tells us the Australian economy is running hotter than anticipated.
Paradise with a static 4.1% unemployment rate, and you got a labor market that's growing with a trickling wage ratio spike, a sweet spot, AUD USD spike, and for intraday trader, that's what textbook news driven breakout.
Oh, it also means the RBA might stay hawkish. If CPI comes in strong again, expect more chances about hikes. This is a kind of macro triggers that would immediately go on your weekly watch list.
The next event in United Kingdom grow it back on the table. Then we shift to London and watch us rise from UK after month of the stagflation fear. We got positive GDP print 0.2% and 0.7%, both beat forecast.
This is especially bullish because it reduces pressures on the Bank of England to pivot dovish. It's a sign that the economy is rebounding without stimulus.
And the GPP reacts as accordingly. Post-release, we saw momentum bulls in GPP, USD, and GPP, GPY. So if the next inflation release doesn't miss, we may see a renewal uptrend in steering pairs.
For trader, did your cue to what UK equity and Atlas more closely? Automatic growth stock may rally, and Atlas startup on pullback become opportunity, not risk.
And now we land back into the US, where confusion reigned and we had a flurry of data, and none of it points to an easy Fed decision tonight.
The core PPI came in hot, 0.5% versus 0.3% forecast, while headline PPI was slightly soft. That's a warning. Inflation isn't gone, it's lurking in producer pipelines.
Meanwhile, retail sales flat 0% growth in weight, especially when the period is lower core consumption. Consumers are under pressure.
So it doesn't end there. Unemployment claims, slightly high. Manufacturing, still in contraction. Although the feeling Fed improved.
So what happened at 7:40 p.m. when Powell speaks? He's got inflation rising, spending falling, and mandate to steer markets. Whatever turn he takes, the market will move.
That means tonight is a high volatility event. Gold, USD, JPY, S&P 500 or prime candidates for a reaction trade. Tighten your risk, watch your direction, and let the news shape the setup, not the other way around.
So here we are, you've seen the structure, you've understood the rules and how you got the macro context that moving the market right now.
Well, this isn't just theory, this is execution in actions. And at WeMasterTrade, we don't just fund traders, we train roles and pay those who prove they can handle capital.
From the first 10,000 instant funding account to full scale 1 million capital pool, the past year you've seen it, your work with us today, and now it's your move.
So there's never more incentives to start and never more capital ready to handle two disciplined traders.
And if you have questions, we are always here, 24/7 support, transparent rules, fast payouts. The entire system is built to support your flow. If you're ready to be serious,
And if you're watching this and thinking, I'm not ready, let that be your challenge. Study, stream, prepare, then come back. But WeMasterTrade still be here and the capital will be waiting. Ủa, là tắt nãy giờ rồi hả?
And thank you all of you for making this live stream incredible success. We're not just growing a trader base, we're building a trading funded fort. We are creating futures and you are invited.
this is where your next chapter begins. Not someday, not next month. It's now.
This is WeMasterTrade and we will see you in the market.